Good morning, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. Today's date is March 23rd, 2023. It's the day after the Fed raised rates by 25 basis points. That was as expected. What we did see was the Fed expects that the terminal rate in 2024 will remain at 5.1%. That was the same that they had in December. In 2024, they do see the rates coming down to 4.3%, but that was still higher than the December forecast of 4.1%. Things like GDP and inflation and the unemployment rate stayed relatively similar to what they saw in December. But the market's taking the moves by the Fed as a little bit more on the dovish side. We saw yields move sharply to the downside. The 2-year yield is back below the 4% level, around 3.984%. The 10-year yield is trading at 3.507%. That's a little bit higher than what we saw at yesterday's trading. So let's take a look at some of the technicals that are driving some of the major currency pairs. We'll start with the euro versus US dollar. Looking at the euro versus US dollar, I want to take a look at the 4-hour chart here. Why? Because I want to outline a couple swing areas of significance. And the first one is this area right through here. And I'm going to show this, and I'm going to spread it out a little bit. But you can see over here we had ceiling. This is a 4-hour chart, so this is like a week and a half of trading through here. Got really messy through here, so I put that in red. And then we started to reestablish this area as, in this case, mostly a support level here as the market spiked to the upside during that week. And then when the market fell below that level, we came back into the swing area and moved to the downside. It wasn't until this week where the price started to move back above that level. And if we move this over just a little bit, you can see that the low price today just came right down to the low of that swing area that comes in around the 1.0866 level. That's just above the 38.2% retracement of this last trend move to the upside here in the euro versus US dollar. The euro has been trending all week, as you can see. You can see this is a 4-hour chart. We started off to the downside the first 12 or so hours of trading, but then it's been up, up, up. Not much of a break along the way. So big moves to the upside. This is the biggest break to the downside. And what do? We come down to this support area near the 38.2, near the 1.0866 level. So this is going to be, sort of the short-term support level that we're going to see if the euro can hold support. If it can, the buyers remain in firm control here in this pair. And on the top side, what can we say here? What we can see here is that we had a number of different highs through here that formed a ceiling. This was during the period where we had this volatility, by the way. And then we moved to the upside. And then what do? We moved back down into this swing area right here. And where do we find resistance? Up at this higher swing area. So you can see how these two swing areas are playing off each other, and they're doing the same thing right here. So if the market is going to go higher from here, we need to get above this swing area up to the 109.26 to 39 level. So there is sort of a battle going on in the euro versus US dollar against swing areas, which were developed back here. And we're seeing it again in the current environment. So watch 108.63 on the downside. Watch 109.29 up to 109.39 on the top side for the euro versus US dollar. Let's take a look at the dollar versus yen next. And again, I'm going to stay on the 4-hour chart to spread it out a bit. Take a look at what levels are in play. And what we see in trading this week, this is this week's trading right through here. We came down to this support area, this yellow area here, and outlining all the different times here where the market came into this swing area through here and found either resistance here or support right here. Admittedly, we did move below that support level on this 4-hour bar chart here, but then reestablished support right here before the market rotated all the way to the upside. Now we're seeing the rotation to the downside, and where we find support? We find support against this old swing area earlier this week. Moved back higher and then back down again in trading here today. We came down to the low prices that we saw just earlier this week, and also went back here, and we found support buyers. Now we're moving up toward a interim level here where we were in trading last week and this week we found support. This is last week's near last week's low. Actually, this is last week's low. And then in earlier this week, we moved lower and then tried to stay below that level. Couldn't do it. found support against it, and now we're back into this swing area right here. So 131, it looks like 59 up to 131.84 is going to be the resistance that we need to get to and through on the top side for the dollar versus yen if the buyers are to take more control. If the sellers are to remain in control, this is the area where sellers want to lean against. If you think the interest rates are going to still continue to go down, and the dollar remain weaker, this is the area you want to lean against for the dollar versus yen. So we'll see how that all pans out. I'm going to put it on the hourly chart just to see what it looks like here. And on the hourly chart, here's our swing area right here. What is important here as well is that the 100-hour moving average is coming back down to move into this swing area. And so that increases the levels, 131.85 levels importance on the top side. If the price can remain below that level, it's more bearish. If we move above that level, we could see more probing to the upside, at least in the short term, with the 200-hour moving average, the next key target on the top side level. Pretty much corresponds with this little bit of a swing area through here. So that area near the 200-hour moving average is going to be a key area for the dollar versus yen as well. Let's take a look at the sterling versus US dollar again on the hourly, on the 4-hour chart. And if we put up that chart here, what I like about this chart, or what the key level is for our trading here today, is this swing area through here. You can see a number of different times where the market found support against it, trying to stay above that level. You can probably even go back to here. And we broke below that level, and what do? We came up and retested it before rotating to the downside here. So that develops this area as a nice key level, and lo and behold, earlier this week, the market came up to that area through here and went up to the peak of it and found sellers. Forgot about this little guy right here, and then rotated to the downside and trading. Here yesterday, during the volatility from the Fed, the market did move back to the upside. And in trading here today, we are seeing that the market did try to hold support against that level right there and here. And we'll see if the market can move back above the 122.82 level and stay above that level. It got messy through here. But again, this is a Fed decision, so we have to take that in consideration. But if we watch the 122.82 level, let's see if we can get and stay above that level. If we can, the dollar remains weaker, the sterling remains stronger. We did see the Bank of England raise rates by 25 basis points today. The unenviable task of trying to figure out monetary policy when inflation is above 10% in that country. At least the Fed has inflation down below that, much below that level, but we will see what happens there. But the pound has come back down, and we need to get above the 128.82 level in order to kick the price back to the upside for that currency pair. If we move below the 122.60 level, should see rotation back to the downside. So there you have it, a look at some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading today. Stay tuned to ForexLive.com for other analysis on some of the other major currency pairs and other markets.